Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.
Bring in Rand Neuner. He is the founder of On-Chain Capital, the host of CNBC Africa's Crypto Trader. Rand, great to have you back.
Nice to be here.
So obviously this was a major topic at Consensus. This is a major topic in the crypto world in general.
Wait, the major topic we're covering from Consensus, the top projects.
Rand Neuner of CNBC Africa's Crypto Trader.
Welcome to episode 2 of our Consensus 2018 coverage here from the Fast Money studios at CNBC headquarters. We've been juggling conference after conference all week. From Fluidity, Ethereal, Blockchain Without Borders, various panels, meetups with blockchains like Enigma and Zilliqa, and a whole lot more. We've spoken to hundreds of experts, investors, founders, developers, professors, parliament members, and crypto community members. Follow us for a recap of Blockchain Week 2018 and the top projects that we met at Consensus.
I think this is the most important week blockchain's ever had in its entire existence.
It's a wave that is continuing to build.
It's amazing. I mean, the energy is like, it speaks for itself here.
This is the kind of excitement we saw in the dot-com revolution right at the beginning.
There are sitting heads of state that are presenting at Consensus. There's members of the House of Representatives who are here. There's members of the SEC. There's 200 events and counting happening simultaneously.
We continue our coverage from Consensus 2018, the biggest and most important crypto conference on the crypto calendar. Now, if you've been watching our shows from the last couple of weeks, all the big investors are talking about investing in protocols, talking about investing in blockchains. And the name Zilliqa keeps coming up. This blockchain has been hyped up a lot, and I decided to find out what all the hype was all about. Chinshu, tell us a little bit about Zilliqa. What's all the hype about?
You know, Zilliqa is a new blockchain. I think the most interesting thing about Zilliqa is it can scale up, with thousands of transactions per second while still maintaining very strong security and decentralization. I think that's a challenge we sort of took on and we achieved on that.
So how do you achieve that? How do you achieve such scale with such high transaction speeds and still keep the security?
I think, the gist is about how do you do something called sharding very securely. So that's where our success lies in. So we divide nodes into different shards, and then each shard can sort of run a consensus protocol in parallel. And then the challenge is how do we divide? If nodes are not divided very randomly, you will have many security challenges. So that's where we design our protocols very carefully.
Now, when you talk about scalability, how many transactions per second are you planning on doing?
If we look at what we are achieving now on a small network, about 2,000 nodes, we can achieve 2,000 to 3,000 TPS. But then that's really not our target. So that just shows like this thing works. But then more importantly, we want to scale up our network and we want to achieve at least beyond 5,000 transactions per second. That's a near-term goal.
Now, Zilliqa isn't a new project. It actually came out of an existing project. Tell us how Zilliqa actually came about.
So all the idea started from a research paper back in 2015. So it's about using sharding to make blockchains more scalable. Then we sort of approved the idea with commercialization of private blockchain deployments, with securities trading, with e-commerce, with other use cases. Then we realized that the scale wasn't big enough in private settings. So we started this public blockchain project, Zilliqa, last year. Now, we can imagine with a proper incentive structure for miners, we can have, thousands or tens of thousands of nodes in our public, Zilliqa blockchain network. So that's, how the project was started last year.
Now, when we talk about a blockchain is not only about technology. A blockchain is also about the developer community, the support community, the foundation, if there is a foundation. What's your structure look like? How big is your developer community? Give us some insight.
So we are really grateful to our very early supporters in our community, especially in the Slack channel, where people used to talk a lot about our technology and how things can develop on top of Zilliqa. Of course, over time, people are also interested in terms of running nodes as miners for Zilliqa. I think that's where we have a very good, foundation in terms of getting support from our community members. But going forward, we want to be also a little more proactive. We want to roll out different programs to sort of help people think about what kind of, the coolest apps they can build on top of Zilliqa. And we want to support them, we want to encourage them, we want to even, engage them in the process of developing Zilliqa going forward.
Now, when is your mainnet expected to go live?
We are trying very hard to get it live before the end of September. Now that's a very aggressive target, I would say.
Make sure you do it properly before you actually go live into the real world.
Exactly.
Now, I want to switch the discussion a little bit, and I want to talk about Ethereum. Do you think that with all these new protocols and blockchains that are coming up, what is the future of Ethereum?
In future, if you look at Zilliqa, if you look at Ethereum, if you look at some other blockchains, I think different projects may have its own strengths and, of course, weaknesses. I think it's more about how do we work together. But we are more than willing to work with other projects on that. I think, coming back to Ethereum, I also feel this is still a pivotal platform in the whole ecospace where, we can work together to achieve a better networking effect.
Does there need to be one winner in the blockchain race, or will there be many? Let us know your thoughts. I'm on Twitter @CryptoManRun.
You are a trading master. You see trading opportunities where others see coincidences. Charts and patterns are everywhere. You can run with the bulls or be at one with the bears. So, don't waste another pip and take your talents to eToro. See why so many top traders choose us as their main trading platform. Start trading on eToro today.
It all starts with conversation. I think it all starts with the discussion.
All right, well, please join me in welcoming and thanking, Jack to our stage.
Is scalability here?
By 2019, it will be here.
5 years ago, people like you were promising me the exact same thing. Where is it? Where's the scalability? Where's the speed, right?
Would you be selling some of your tokens?
I am an investor. I've been an investor for the last 2 years. Yes, I would sell a lot of my tokens. I think 80% of my tokens I've sold.
You might look at the markets and see a big downtrend, but I think this is just the beginning.
We're getting the distribution system in place with all these exchanges, and you're going to see products that are just launched to these things, and I think we're going to remake the future of finance.
I've kept maybe five solid tokens.
What are the 5?
I can't tell you that.
So will you be selling your crypto?
Boy, you really went to journalism school. That's very good.
We promise to keep you covered with all the big announcements at Crypto Trader, and we've got a big announcement for you. 18th of June is the day you need to remember, because that's the day that Metronome finally launches. I've got Jeff Garzik with me. Now, Jeff, you're a ex-Bitcoin core developer, founder of Block, and now founder of Metronome.
That's right, chief designer and self-applied label chief economist of Metronome.
So let's go through your history. How did you get involved in Bitcoin?
Well, I was working at Red Hat in 2010, and I saw on News for Nerds website, decentralized currency. I was an immediate skeptic. I said, I have thought about this. I know distributed computing, no way it can work. And I enjoy being proved wrong. So I read the article. It was open source. I was able to look under the hood and say, who is this Satoshi Nakamoto guy? What is it? Why does it work? How does it work? And I proved to myself, yes, Bitcoin really does work. I immediately got involved, started sending changes to Satoshi and his number 2, Gavin Andreessen. They accepted the patches in the normal open source process, and my development history into Bitcoin began.
Let's talk about Metronome, because it's been highly anticipated. What is Metronome?
So it's a new cryptocurrency, so it's not a utility token, it's not a security token, but it's a new money. And we call it an almost autonomous Federal Reserve. It's very much an autonomous money supply. It's a decentralized protocol from the get-go. And we had to think, how do you bootstrap that? How do you start something from a kernel but release it into the wild, and how does it live on its own? That was one of the challenges.
Is it a blockchain? Is it its own blockchain like the Bitcoin blockchain or the Litecoin blockchain? How does the token actually work?
It's a little bit different. It's a set of smart contracts that uses an existing blockchain for security. So it uses Ethereum and other blockchains for security, and requires a little bit of explanation. It's the first token, as far as we're aware, that can hop to a different blockchain if need be.
How do you hop your tokens? If they're sitting on a Bitcoin blockchain wallet,
that's right.
How do you hop it to an Ethereum wallet?
So you'll use a wallet, you'll use some special software that creates a receipt that says I'm moving it off the Bitcoin blockchain onto the Ethereum blockchain. And from a legal and tax standpoint, it's very important that it's the same asset that's moving. Like one gold bar moves from one warehouse to another.
So you're not selling it, so you're not recognizing any tax.
Exactly, there's no tax event.
Okay, so when are you launching Metronome? There was a date that was mentioned yesterday in the big announcement.
June 18th is when we launched the initial supply auction. It's a very unique auction, kind of like a reverse Dutch. It's a descending price auction. It starts very high price and it ticks down slowly every 60 seconds until you hit that market price and the token supply sells out.
So are you saying that users must actually sit next to their laptops and watch the price go down? And when they think that the price is right for them to get in, they should buy?
That's simplified, but yes, there's some software that helps you say, I like it this price, I'll set a limit order. But that's basically the process.
Now, this auction takes place for about a week.
That's right.
What happens after the week?
After the week, there are daily auctions very similar to how the U.S. Treasury auctions treasuries on a daily basis. So the initial auction auctions 8 million tokens. Then every day after that, 2,880, with a little bit of a weird number, that's 2 every minute ad infinitum. So for the next 1,000 years.
And that's the inflation of the money supply.
That's right. That's right. And so the inflation percentage is, it's like 10% the first year, 5% the next year, down, down, down for the next 35 years until a 2% inflation floor.
Now, what about infrastructure, wallets, exchanges? Can I store my Metronome in an existing wallet? Is it a ERC20 token?
Absolutely, it's an ERC20, and that was very important to us to reuse existing infrastructure. We didn't want to build another blockchain network. We wanted to reuse Ethereum's security, Ethereum's blockchain infrastructure, Bitcoin's infrastructure, Bitcoin wallets, and that's why we ride on top of those infrastructures to use it.
What about scalability? So Ethereum is having scalability issues. Bitcoin at one point was having scalability issues. Does that mean that Metronome automatically gets the scalability issues?
That's a great question, and the answer is both yes and no. In that Metronome relies on a blockchain and an existing blockchain, therefore that blockchain might have scalability issues. What Metronome does different, what's unique, is you can say, oh, I don't like that, high fees, scalability issues, I'm going to move to a new blockchain with lower fees and better scalability.
And merchant acceptance of Metronome. If a merchant accepts Bitcoin, do they automatically accept Metronome?
Yes.
Wow.
So it's automatic, it pulls in all the existing infrastructure, and so once you have that basic wallet infrastructure, boom, Metronome can be in your crypto wallet, in your merchant dashboard, in your point of sale terminal.
I've been following Jeff for a long time. On the 18th of June, I'm going to be sitting next to my computer on metronome.io. Last night, I moderated a panel of Israeli ICOs, and there I met Omri Ross, who's the founder of Firmo, a derivatives trading ICO. I caught up with him again at Consensus and sat down with him to talk about the project. So, Omri, you told me that you've got a working product. It's not just a white paper. Show me how the product works.
Yeah. So in this case, while we are not an exchange, I want to show you how an exchange will use the Firmo protocol, because we think that's an excellent use case. As we said, the derivative market is a huge market, and let's focus on that one.
So let's slow it down a bit. Let's talk for our viewers that don't know exactly what you guys do. Just explain what a derivative is, how it works.
Right. So a derivative is any product which price is based on a different product. So for example, if we think about a future price of Bitcoin, the price of Bitcoin in 1 month's time. So we can make a contract today that says I'm going to buy a Bitcoin in 1 month's time, saying $10,000. But we don't know the real price in 1 month's time. So this way, this contract is called derivatives because it's derived of that price.
So you're buying a future contract on Bitcoin at a price of $10,000. Exactly. So how would you do it on your system?
So on our system, you log in for the exchange. Then you will just use the GUI directly to create a product. For example, a future product. In a future product, you will pick what asset you want to trade at what other assets. For example, Ethereum at Gnosis. You'll find the exchange rate taken directly. In this case, the exchange rate from Gnosis to Ethereum. So let's log in here for our exchange demo. In that case, you can create a new future product. For example, a future that's going to swap one asset to another one. In this case, you can pick Ethereum to Gnosis, for example.
So you're saying we're going to change 23 Ethereum into 236 Gnosis.
Yeah.
Now, how do we decide when?
You decide when by actually picking the date when this is going to be expired in the same next asset. So you put here what is the end day of that contract, and you press the next button. Then you can review what you have created here. It was actually a lower amount, just 1.23 Ether. The exchange rate was 236 from it. And then you can see the expiry date, and you can just create the product.
So now
then you can come to the marketplace.
I've created a contract.
Exactly.
Now that contract's now gone to a marketplace where people can see that I've asked for this contract.
Exactly. And then people can log in on their side and actually buy or sell that product from the other side.
So basically, if I want to create a contract to buy, and there's another party that wants to sell this contract, the two will match, and we create a contract.
Exactly.
Now, how big do you think this market is?
I think it's going to be huge because I'm learning from the traditional markets for derivatives. This market is estimated up to $1.2 quadrillion.
Is the derivatives market actually bigger than the real market, than the underlying market?
Way bigger than the underlying market, and even bigger than the world GDP. If you take the full world production GDP, we're speaking about 15 times the world GDP.
So you've built a system that with 5 clicks creates futures contracts and options on crypto, and you've launched a token to drive this.
That's correct.
Why do I need a token?
Mainly because on our side, a really important element is that we don't want to just create a speculative market. We want to actually support a real production. And in our case, whenever you're running a derivatives, right, for example, a future, you want to make sure that there will be money to be paid in case of the counterparty default, right? And that portion of the escrow is kept in a token.
So the escrow is actually a smart contract in this case, whereas in the traditional world, the escrow is not a smart contract, it's actually a business.
Exactly.
So you've replaced intermediaries, financial intermediaries, with a smart contract. You've tokenized, very simply, a way to create futures contracts on crypto, and you believe that this will be bigger than the crypto market itself.
That's right.
Wow. Genius. How do I get involved?
So currently it's a private sale for accredited investors, but people are very welcome to get in touch with us, and we share with you more information.
That's Firmo.network. Your biggest takeaway from today?
We certainly see the enthusiasm of lots of people. What's very impressive is that every second person you meet not only is not from New York, they flew in just for this week and for this conference.
We're telling everybody that this is going to be the next big thing, and now we're starting to see that.
We'll see what happens. Ethereum is making tremendous progress in bringing the perceived imminent future of the solutions for the world that blockchain can bring. It's here. It's actually here.
I have no idea. You can't put me on the spot this way.
So I was just in there with interoperability. I think that's going to be the big theme this year. So that is most interesting to me today.
Now, if you've been following our show, you'll remember that a few weeks ago we were in Korea. And when we spoke to the fund managers in Korea, they all spoke about a protocol called Thunder. I've managed to track down Elaine, and Elaine is one of the founders of Thunder. But not only that, she was also one of the first people to write an academic paper on Bitcoin. Elaine, tell us the story.
I guess this was back in 2011, and one of my very good friends, he was an early Bitcoin miner. And I immediately got extremely fascinated, particularly because, I worked on the traditional crypto for a long time.
Elaine, you're a professor, a professor of computer science. Are you still practicing?
And I'm a professor at Cornell, and normally, I would be teaching at Cornell, but right now, because of Thunder, I'm on leave of absence, and I'm fully committed to Thunder.
Awesome. So, Elaine, a lot of hype around Thunder Protocol. What's all the hype about? What is Thunder Protocol?
Well, right now, one of the biggest and most exciting challenges for cryptocurrency is scalability, right? But none of these apps will actually take off unless there's like a high-performance blockchain. We think like we have the best technology to overcome this challenge, right? We have a new consensus protocol. Our protocol is like extremely simple, and it has provable security. And right now, I'm very excited in getting it implemented and deployed.
A lot of our viewers are very non-technical people. They're CNBC people, they're traders. How would you describe your protocol? How does your protocol work? How do you achieve the scaling?
So at a very high level, right, you can, the protocol combines what's called the fast path and the slow chain. So for the slow chain, the best way to think about it is like any standard blockchain like Ethereum or Bitcoin, but it doesn't have to be a proof of work blockchain. It can also be a proof of stake blockchain. Okay, so now on top of that, we build the fast path. And the fast path is voting based. It's like a single round of voting that's facilitated by what's called an accelerator. So the accelerator is going to coordinate how people are going to vote to reach consensus on the fast path. And as soon as transactions gain enough votes on the fast path, you confirm instantly, and you don't have to wait for even a single block interval of the underlying slow chain, right? Because as we all know, Ethereum's block interval is like 15 seconds, Bitcoin 10 minutes, and that's like really too slow for transaction confirmation.
And how long does this voting take? I mean, this voting must take some time as well.
Right. So that's a very good question. The voting basically takes 2 network round trips. So basically, the accelerator sends a proposal to everyone, everyone sends their votes back, and then you can confirm instantly. But now the very important thing to remember is that the accelerator is not trusted. So this is still like a fully decentralized system, because even if the accelerator is like arbitrarily malicious, it cannot break the security properties of the protocol. It cannot break consistency. The only thing it can do is to like potentially slow down the system.
Now, when is your mainnet going live?
Our mainnet is going to launch in November, end of this year, and we are going to launch testnet in June. And we are very excited about collaborating with dApps and having dApp developers try it out when we are even in the testnet stage.
And in your modeling, in the mathematics, how fast do you think your blockchain is actually going to be? How many transactions per second do you believe you'll be able to achieve?
We expect that even with a single shard, we can be 100x faster for smart contract transactions and maybe 1000x faster for payment transactions.
And is that excluding sharding?
Right, this is just with a single shard. And then like in the second stage of the project, after the mainnet launch, at that point the scalability will increase proportionally to the number of shards.
Now Elaine, earlier this year you raised about $40 million. What valuation did you raise the $40 million at?
The most recent staff round was at a valuation of $200 million for the total market cap.
Now Elaine, for people that invested in your project, are they going to get an ERC20 token as a placeholder like EOS did? Or do they have to wait until the mainnet goes live before they get their tokens?
We did not promise the ERC20 token in the interim.
Great.
But it's potentially under discussion.
Elaine, it's been an absolute pleasure meeting you and having you on our show, and we'll stay in touch with you when your mainnet goes live.
Okay, thank you
so very much. If you've been watching our shows, you'll remember we had an interview with Joseph Lubin from Ethereum. Yesterday, my good friend Jimmy Song took him on in a panel. Jimmy, hold on a second. Now, what did you say about the usefulness of blockchain?
Well, I didn't think it's useful for anything other than Bitcoin, right? Like everything else is either not really decentralized. So, if it's centralized, you don't really need it.
So define that, because there's so many things being built on Ethereum, things which are going to change the world. Vehicle charging stations, platforms to reward actors in Hollywood or artists.
Most of those do not need to be built on Ethereum. They're much better done as centralized databases with some sort of public key cryptography with receipts or something like that for transparency. And that's it. Most of the time, you don't actually need the decentralization. With money, you do, which is why it's a good use case for Bitcoin.
That's my good friend Jimmy Song. It's so good to see him always. We promise to keep you covered from Consensus 2018, and we promise to bring you the most amazing projects. I've got a project here that says we shouldn't wait for scale because they've got it now. And if you're struggling with Ethereum scale, just move your project onto their project. Jason, tell me about GoChain.
Sure.
So right now we're 100% Ethereum compatible, so any current Ethereum users can lift and shift and seamlessly transition to GoChain with no code changes to get an immediate 10x in decentralization, 100x faster speed and performance, and be 1,000 times greener.
How do you achieve this on an Ethereum type code base?
Sure. So our lead dev and architect, Travis Reeder, he founded and built a company called Iron.io, where they pioneered serverless cloud computing to over 1 million transactions a second. So while everyone talks about that number in blockchain, we've got a guy that's actually done it. So we've done 3 things to get that speed. First of all, we upgraded the Ethereum code base where we optimized it. The next thing we did is we changed the consensus algorithm from proof of work to proof of reputation, which is an upgraded form of proof of authority. And then we used a lot of the off-chain data storage that Travis used to build Iron and handle the data.
Explain to us how it works.
Sure. So the consensus mechanism works in that what's at stake is the company's corporate reputation. So it'd be similar to delegated proof of stake, except for there's no monetary stake. What's at stake is the whole market cap of a company. So we've got 50 corporate nodes. And the reason for us to use corporate nodes is we want to get enterprise on the blockchain. And we don't think that corporate enterprise will trust a permissionless and untrusted network, and we think they'll trust a permission trusted network.
So let me get this straight. If I'm running a dApp on the Ethereum network,
yes,
and Ethereum is too slow for me,
yes,
I can move it onto Go very quickly, seamlessly, because it's the same code.
Yes. So you can literally, so the CryptoKitties problem, the IDEX problem, we can solve those right now, immediately.
It sounds too good to be true. Is this a concept, a white paper? What is this? Is there a mainnet, a testnet?
So I'm glad you asked that question, because I can officially announce that our mainnet has gone live. We turned it on last night. So we're running at 1,300 transactions a second right now, 100% Ethereum compatible. So any Ethereum users can just literally point at our network and go.
I want to make sure I get this.
Yes.
There is a protocol. It's called Go.
Yes.
GoChain.
Yes.
It's doing today 1,300 transactions per second.
Correct.
You've kept it at 1,300 transactions per second, and it's live today.
It's live today.
Is there a website? Is there a Telegram?
Yeah. GoChain.io is Telegram as well. It's go_chain for Telegram.
That's GoChain.io, and I'm going to go and check it out because it sounds too good to be true. Vinny, buy me a beer.
Sure, let's do it.
Okay, so what are we doing?
We're using a digital ID on my phone to prove that I'm over 21 years old so I can get a beer.
Okay, let's try.
Sure. It's asking me to authorize my age. So now this machine doesn't actually get any of my information. It doesn't get my birthday, anything. It just knows I'm over 21. And now the machine's checking using the blockchain to make sure that I am over 21, using a method called zero knowledge proofs. And voila.
So my identity, it's sitting on the blockchain.
Your identity sits on the phone and it's verified via the blockchain, but it doesn't. The machine doesn't get to see any of that information.
Yeah. And I can get onto a plane, or I can just get a beer.
Let's start with beers. But yes, that's exactly it. We will be able to do a lot with the data on your phone.
We're going to have such a hangover after consensus.
I know, free beer is on me.
Just a reminder that if you're watching us on YouTube, now would be a good time to hit the subscribe button. We promise to bring you coverage of the biggest and best projects out there. Well, I found a project that's trying to raise $5 million and has $1 billion in pledges. Sam, what is this project?
It's Arweave. It's a permanent information storage system. So what we've done is we modified the blockchain so that miners are rewarded for storing data.
So there are other storage solutions. There's storage, there's Filecoin. Why do you think there's so much appetite for your project?
Yeah, I think it's because we offer something totally new that's never really existed in human history before, which is the ability to truly store data permanently. That is, for tens of years, hundreds of years.
So I'm going to challenge you a bit. Dropbox also stores my data.
For sure.
And apparently they're going to store it for 100 years. What's the difference between your solution and a Dropbox?
The difference is trust, essentially. You have to trust that Dropbox are going to continue replicating your data for 100 years, which honestly I find, unlikely. So what's great about crypto economics is that we can build systems that incentivize users to do these things for long periods of time.
But Dropbox is incentivized by virtue of the fact that I pay them a couple of dollars every month.
Yeah, but they're not necessarily going to be running the same products in 100 years' time. In fact, I think it's very unlikely that they'll be running the same products. Whereas with a crypto economic system like this, if everyone agrees about the game that should be played, it just continues to be played.
So that's the centralized solution. That's the Dropbox type solution. Let's talk about the decentralized solutions. You've got Filecoin.
Yeah.
You've got storage. You've got a whole host of others. What makes Arweave different?
So what we've done is we've actually solved on-chain data storage. So with these other solutions, what you've got is like a peer-to-peer file distribution network in the background, and then you've got settlement of payments on-chain. What we've done is we've made a system of crypto economic incentives that allow you to grow the size of the blockchain to massive, massive sizes, like internet scale sizes, and then distribute that data across everybody's computers, and miners get rewarded for storing that data. So it's actually the storage of data that allows you to come to consensus in the network.
So are you saying that with the existing systems, namely storage and Filecoin, they are not storing the data on the actual blockchain?
This is the thing, exactly. So in the case of Filecoin, for example, they store the data in IPFS around the edges, and then they just settle the payments on the chain.
Okay, and you're actually storing the data on the chain.
Exactly.
How do you incentivize miners, nodes, computers, to store the data on the chain?
So we've made it part of our consensus mechanism. So in order to take part in the mining of the system, you have to store this old data in the system. And more broadly, the more of the old data you store, the more likely you are to get a mining reward.
So it seems to me like there could be two problems. The one is, could it be slow? How fast is this system?
It's really fast, actually. So because of the problem that you get with storing large amounts of data in these networks, we've had to come up with a solution, which we call wildfire and block shadows. So instead of passing around the whole block in our network, we pass around a 2 kilobyte header of the block, which allows miners that have all of the transactions locally already.
So what about cost? What about, is it cheaper than the existing solutions?
So what's interesting about it is because the data storage becomes part of the consensus mechanism, it's actually truly permanent. And the more data is stored in the system, the less hashing the miners have to do. So from their point of view, it's actually better to have more data in the network. So that means that the cost can be cheap, and also it's permanent. So you don't pay recurring fees. You just pay once, store forever, and so eventually it's always cheaper than the alternatives.
Sam, are you saying to me that you're the first company to do file storage on the blockchain?
Yes, I believe so.
No wonder you're 150 times oversubscribed.
I know, it's
Sam, for our viewers who want more information, where can they go?
Arweave.org.
They are looking for £5 million. They have got over $1 billion in subscriptions. So if you want more information, that's arweave.org. I know she doesn't look like it, but she's a politician and she's looking at the blockchain. Eva, what exactly do you do?
I'm a member of the European Parliament. I'm working on regulation, legislation for blockchain technology.
Now, the European Parliament, how do you view the blockchain?
We are supportive. We see potential to this technology. It can change many things, many sectors of our lives. We believe peer-to-peer exchange, removing friction, intermediaries, and giving back control of their data to the citizens is extremely important, as you saw with what happened with Cambridge Analytica.
So are you supportive of cryptocurrencies?
Personally, I'm supportive of cryptocurrencies. I believe they can be other forms of currencies, but we are still struggling with the definitions because there are many and they're used for different purposes.
So it sounds like good news all around for crypto.
I think it's good news. We are supportive. I'm excited. I'm a Greek. I know how the crisis hit us, and I know what happened to Cyprus when suddenly the bank sat down and people had no control of their deposits and savings. So I think there is huge potential here.
One of the big advantages of blockchain is that when transactions are done, they're final. But that could also be one of the big disadvantages about blockchain, because what happens if you do a transaction and the outcome is not really what you anticipated from the smart contract? Well, you run a company called iCash.
Yeah, we agree that is a major gift and a major curse of the blockchain, is the irreversibility. We have a funny picture that I put up when I give speeches, which is of an old sailor with a tattoo all down his arm with 8 different girlfriends' names. And don't you wish that he could reverse some of those decisions? This is what happens with the blockchain, is if you truly decentralize something and truly put the validations in the hands of independent third parties, well, you better trust that those independent third parties are going to get things right. What we've created is the proof of trust protocol, which allows for, at the end of a smart contract settlement, for one of the participants in that to contest the outcome and elevate it to a network of rated oracles that we cultivate and compensate using our token to make accurate affirmations. So we assure inputs to the blockchain as accurate.
Now, when would this be used? Give me an example of a real-world example of when something like this would be used.
Well, you know, new use cases pop up every day. I was lucky to be invited down to Goldman Sachs to talk to them about investing. And they said to me, we want to use this for exchange interaction. Because what they recognize is that they need to be able to represent and warrant that the counterparty in the exchange is who they say it is, or who they say they are. And we don't really think about that, but for age verification, if it's truly decentralized and you don't know your counterparty, that becomes something that you better be able to affirm in the eyes of a regulator. In any smart contract, so if you want to take a short position on oil at $75 with me and I go long oil, if at the end of our smart contract it's 76, but you get paid, I'm going to want to contest that. And I'm going to want somebody who is rated as being an accurate third-party validator to assure the outcome of that is accurate.
Here with Will McDonough, and he's got a company that solves just this problem. So, Will, doesn't that defeat the purpose of the blockchain? Isn't the purpose of the blockchain that once we put something in the blockchain, it's immutable?
No, we aspire to have everything immutable and everything on blockchain. But what we're doing is creating an intermediary step prior to that happening, at which point somebody could potentially contest the outcome.
So it's almost like when you're about to delete your email and it says, are you sure that you want to delete your email?
Very well said.
Okay, let's talk technically. How do you achieve this technically?
So what we've done is we're building across multiple blockchains as well, which I think is important. You know, a lot of the talk here this week is about, will Ethereum scale, will EOS scale, what will have speed, what will have cost.
You don't care because you're building on all the blockchains.
We're building on all the blockchains and completely hedging out that risk for our token holders. I think that anybody that builds just on one blockchain is just a levered bet on that blockchain succeeding. So by building on multiple blockchains, we'll allow anybody, no matter what blockchain they're interacting with, to add this into their smart contract. Technically, how that will occur is we'll create lines of code that will be embeddable into the end of the smart contract, at which point it's due to settle. You have a period of time, a window, if you will, of 30 minutes, in which time either participant can say, whoa, 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 slow down. I want somebody who's in the business of validating this to look at this and make sure this is right, and I'm willing to pay, call it 25 basis points for that capacity.
So I pay to appeal, and I pay using your token. So I'm writing my assumption that there is a token.
Yes.
So speaking of tokens, you're doing an ICO?
We're in the midst of doing a capital raise. What we're doing is a security token offering. So we've decided to build our token to be perfectly compliant with the SEC. My last business was a company I took public on the London Stock Exchange for $825 million. I've done this before, and I totally value being within compliance because I know, as we see here at Blockchain Week, there's a lot of institutional interest in investing in blockchain and in cryptocurrencies. And when those folks come to invest, they're going to have to invest in the businesses that their mandates allow. And I guarantee those will be ones that are fully compliant with SEC regulation. And we will be one of very few that are.
So we're running out of time. The details of your ICO, where can our viewers get more details?
You can go to icash.io and learn about our project. We're been very lucky and have the majority of that full, but I'd love for people to learn about our opportunity.
So I want to ask you a question. If I want to invest in your ICO and then I click send, and then I have a change of heart, can I appeal?
You know, people are going to think I put you up to this, but we also are going to be one of the only, I believe we're the only, but I have to say that to be careful. We are ensuring validity of subscription to our ICO. Meaning, if anything goes wrong with your transaction and your subscription, we underwrite and insure that, and have partnered with a quantum computing insurance company out of Bermuda to do so, called Envelope Risk.
Well, good luck with your ICO.
Thank you.
What's with the outfit?
So this is Solgaleo. He's my guard lion. He's a legendary Pokemon, and I've got a Litecoin mine, and he is the Pokemon of the sun. My name is Seth, and I have been hodling for a while, so I'm retired, and it's great.
What did you hodl that made you retire?
Bitcoin.
Only Bitcoin?
Until recently, I went through an altcoin phase like everything else, and they're all bullshit except for Monero. So Bitcoin, Litecoin, Monero, that's it.
What's the wallet?
So this is the Disco Bit. This is cold storage. It is a metal paper wallet.
Where do you keep your private keys?
On this device. This is a solid state drive 3 keyring solution that turns your 12-word seed into a 3-word seed. This is the prototype.
Favorite token for 2018 is?
Waves.
I don't know, it's pretty amazing to see just how far the space has come in just a couple years.
If you're not thinking about the other side and potential impacts and the negative parts of it, then you're not a good investor.
There is a real, hey, we're in this together. This is a small community, and if we can, a lot of these projects are open source, and if we can contribute, let's make it happen.
There is probably a lot more due diligence that the community needs to do before they start taking this as a serious investment or asset.
So I'd imagine a year from now it would be like at least 2% of the world GDP.
I mean, there's a real sense of this is a technology that can change the world.
And one by one, all of the arguments I've heard over the years get knocked down. It takes a little time because it's all really about community. As long as the community is there and all the smart people that we see in the space are there, they're going to just evolve this stuff until it works for real.
This is the future of the internet. So it's happening here, it's happening now, and you don't get this caliber of attendees, participation, this kind of collaboration that takes. So this is a really big moment.
The government is cracking down on crypto, but one Bitcoin bull says it could be signaling a major buy sign. Fast Money friend Rand Neuner will be here to join us. Tell us why. More Fast Money still ahead.
That brings to an end our coverage from New York City and from Consensus 2018. We're making our show truly global, and so next week we'll be coming to you from Berlin. Let us know what you think of our new global format. I'm Crypto Man Run on Twitter. I'll see you guys next week. Until then, trade well, my friends.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.